Welcome to the Capital News. I am your host, Alex Karitis. Today is Monday, March 4th, 2019. Thanks so much for joining me today, ladies and gentlemen. I hope everyone is doing well. I hope you enjoyed your weekend. So let's get into some of the economic news for Monday. So the S&P was down 11 points. The Dow was down 207 points. The NASDAQ was down 18. And the Russell 2000, the small cap index, was down 14 points. Of course, all of these markets closed lower for the day, but they definitely rallied probably around 2 o'clock from their lows. I think at the lowest point, the Dow was off some 400 points. So quite the comeback to close down for the day at 207. And likewise for the S&P, NASDAQ, and the Russell 2000, they all basically followed suit and were definitely off their lows of the day. So what was the news? What happened? We'll get to that, don't worry. But of course it has to do with US-China trade talks and some other data that's making its way through the news cycle. Oil, gold, and silver continued their declines, but nothing as severe as it was last week. The 10-year Treasury, it now yields 2.72%, so that was a modest decline on the day. And the dollar was stronger pretty much across the board against its basket of currencies, which, if you listen to a previous podcast where I was talking about President Trump and his speech at CPAC over the weekend, he's coming out now, and of course he continues to attack the Federal Reserve and the Federal Reserve Chairman, which I really don't have a problem with from the standpoint of the fact that, there's really nobody more against the Federal Reserve than me. I want them abolished. They don't need to exist. They don't need to be messing around with markets. I mean, everybody here determines the price of oil and lumber and every other commodity under the sun and every other good and service under the sun. Why do we need 12 eggheads to sit around a big table debating what the price of capital is supposed to be? That's our job. Everything else works. Grocery stores get filled. Malls get filled. People show up to work. They do their job. They go home. They get up and they do it again. They don't need 12 people sitting around a table to tell them what to do. Why do we need that in the case of our capital, of our money, the price of money? We don't. But it's a fixed rig system. That's why they're there. We got to get rid of them. We got to get rid of the income tax. And unless and until we do that, all of this other stuff that we talk about here every day, whether it's on the geopolitical report or whether it's on the economic news report here now, it's meaningless. It'll just be another kick the can down the road. It'll be a Band-Aid on a gunshot wound. That's all it'll be. It'll be morphine on cancer. Do something significant. Do something structural. That's what needs to be done in order to solve the many problems that we have and we've created ourselves. But getting back to the CPAC speech from President Trump, not only was he attacking the Federal Reserve, but he made a strange comment to me in regards to saying that the chairman of the Federal Reserve wants a stronger dollar, and I guess in part that would mean that the Federal Reserve as a whole wants a stronger dollar. I mean, just look at the history. Nothing could be further from the truth. They have decimated the dollar since 1913, their founding, and then once the gold standard was removed from President Nixon back in 1971, I mean, all bets were off. It's just been downhill for the dollar ever since. Now you have to look at it. The dollar does trade relative to a basket of currencies, so everything is relative. But nevertheless, I mean, you have the jokes with your grandparents. Yeah, when I was a kid, I could buy anything for a nickel or a dime. Now you can't. I mean, why do we even have nickels and dimes? I don't even get it. I mean, you can't use them for anything, just to round up to some whole number. I mean, I'm serious. I'm clamoring here for words because it's just ridiculous when you understand how the Federal Reserve has just simply decimated the dollar. And of course, when you look at an actual U.S. dollar, it says it's a Federal Reserve note, so I guess it's their property. If they want to destroy it, I guess they can do that. But they do it at our expense because that affects your cost of living. If it takes more dollars to buy the same amount of goods, you got a problem. Because we know your incomes aren't increasing as fast as financial assets do, or as fast as the upper echelons of the income brackets do, the 1%, the 5%, the 10%. Again, I'm not about class warfare, not at all, but you have to look at why that takes place, why that has happened so drastically since 1971, and particularly over the last decade, and of course it goes to quantitative easing. I've given many examples here on this podcast in regards to why there is such income inequality and why we are at each other's throats politically. Because it's real. Because it's real. And I'm just glad that there are enough people out there, even in the financial world, and that's really what I'm talking about here, big-named hedge fund managers or former hedge fund managers who said it was the biggest wealth transfer in the history of the world. Quantitative easing was. It took money from the lower and the middle income people in this country and gave it to people in the hedge fund industry. Multi-millionaires and multi-billionaires. That's where it went. It was a wealth transfer. This was supposed to be the quote-unquote wealth effect, the trickle-down effect that was supposed to take place to get the U.S. economic engines revved up and back to business after 08-09. Well, it didn't work. It didn't work. The rich got richer, the poor got poorer, the banks got bailed out, you lost your job, you lost your home. I mean, you know the story. I don't like talking about it because it is depressing. But we have to talk about it because we have to identify and root cause the problem. And the root cause of the problem is the Federal Reserve and the Federal Reserve's policies being joined at the hip with our federal government that decided to bail out the banks and the financial institutions that brought the world to its knees. Let's bail out the people who screwed everything up. Now, if you want to continue down that path, I guess you can. I guess we have the right to vote for who we want to vote for. But don't be surprised when nothing gets fixed. That's what I'm telling you. Now, why did these markets sell off today? Why? Because if you looked at the Asian markets, they performed rather well yesterday. Now, they're down today so far, but they rallied strongly yesterday. Well, they rallied off of U.S.-China trade talks. Now, that news obviously led to the American markets, the futures being up, but they traded down most of the day and closed down for the day. So what's going on here? Is it finally becoming true, what I've been saying here all along, that it's buy the rumor, sell the fact? Are the markets getting tired of these breadcrumbs? Are they tired of all of the adjectives that come out from President Trump, Kellyanne Conway, Secretary Mnuchin, Larry Kudlow? It's fantastic. It's remarkable. It's historic. What are the details? Is the market finally fed up? Have the laws of diminishing marginal returns on this story finally come to pass? Or are the markets finally saying, all right, we get it, we're tired of this, it's been 3 months now, we rallied very strongly from our lows back in December. I mean, come on, now we need some real details, we need some concrete information. And finally, you're starting to hear that in the financial media too. Markets they're tired of this story. They want to know what is going on. And I, frankly, am getting tired of talking about this, but this is what we have, because this is the hope that markets have been clinging to. Not only the money printing that the crackheads want the Federal Reserve and other central banks around the world to keep doing, they want their fix, so there's no question about it that they want central bankers to continue to put the pedal to the metal and print as much funny money as they possibly can to keep a rally alive and going. But they also want some sort of structural issue, and right now that seems to be the U.S.-China trade talks. Now, I think this whole thing has been overblown. You know my opinion on this. You're talking about $200 billion worth of Chinese goods that have a 10% tariff on them. So that's $20 billion. You're talking about multi-trillion-dollar economies, the U.S. and China, and we're complaining about $20 billion. It just doesn't add up. Now, you got some people that get on the news and they want to talk about, well, it's supply chain disruptions and we don't know what's going to happen and you can't just turn that on a dime. Well, that's true. That's true. But at the same time, everybody has been saying since this whole thing began last year that they'll eventually strike a deal. So what's the big concern? What is the big concern? The only big concern is if there is no deal and you have tariffs that increase, and then you have the two largest economies in the world at odds with each other, and it gets worse, then you have an issue. These tariffs were all about bringing both countries together to say, okay, look, we got some issues here. And I know I told you guys previously on another podcast that there was a list. Let's just say there was a list of 100 things. The Chinese said 40% of that list, no problem. We just needed to be asked. Somebody just needed to bring it up, and we're glad to acquiesce. We're glad to work with each other on that and get things done. Then you got the other 40% that says, well, okay, we'll make some headway, but there's going to have to be some give and take on both sides. And then you have that remaining 20% that's sitting there, and the question is, are they going to move on that 20%? Now, seemingly, from what we have been told most recently, is yes, the Chinese will move on that 20%, which basically is comprised of technology transfers, IP theft, cyber theft, all that jazz. Now the question becomes, can President Trump and President Xi come to a formal agreement, do their signing ceremony, yada, 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 and will the Chinese stick with it? Now that's becoming the narrative. So now we're starting to shift. A deal is pretty much all but done, and now the markets aren't going to be satisfied, I think, unless and until we get some concrete information. But who the hell knows? Again, I'm not here to give day-to-day guidance on what these markets are going to do. Maybe this is the reason, maybe it isn't. But it makes sense to me because I've been talking about it, because you got to give some facts eventually. And you've been pulling everybody along for 3 months now. You got to give some facts. So the question now becomes, the new narrative is, well, will the U.S. keep the tariffs on at least some of the goods? Remember I was saying yesterday, the carrot and the stick? Because we know the Chinese are good at making deals, and they're good at saying stuff, and they'll put their name to paper, and they'll have these signing ceremonies and all that stuff, but are they going to follow through with it? And that's why we need to keep the tariffs on. So will this story drag out for another 6 months? Will it drag out into 2020? I mean, I guess it's all dependent on what this fantastic, remarkable, and historic deal is. But thank God the markets are getting fed up with this crap and all these adjectives saying it's the best thing ever. You know, you're a salesman. You're supposed to underpromise and overdeliver. So to me, the only way this thing can go is down, because it's been talked up so much. But we'll see. Maybe it will be the best deal ever. I'm highly skeptical of that, but we will see. Now, the other news that was taking place that may have contributed to the market sell-off was U.S. construction spending unexpectedly falls in December. The Commerce Department said on Monday that construction spending declined 0.6% after an unrevised 0.8% increase in November. Construction spending increased 1.6% on a year-on-year basis in December. It rose 4.1% in 2018, which was the weakest reading since 2011. The release of the December report was delayed by a 5-week partial shutdown of the government, yada, yada, yada. We know all that jazz. So this was the weakest reading since 2011. You're starting to spot a trend here, ladies and gentlemen. Every piece of data that comes out, month over month, year over year, is disappointing. It's to the downside. Do we still have some numbers that are still in expansion? Are they still above that 50 mark? Yes, but they are declining. Did GDP in fourth quarter beat expectations? Yes, it did. I am not a doom and gloomer, but I'm not here to BS you. I'm not here to lie to you. I'm not here to tell you everything's great and golden, when in my honest opinion, I don't think it is. And every time we get some data out, it proves that theory, that things are not great, that this is not the best economy in the world or ever in American history. That's most definitely not true. You know, that President Trump wants to use exaggerations and hyperbole and all that jazz and get up there and say that and be a cheerleader for the United States of America. I love the fact that he wants to be and is a cheerleader for the United States of America. I actually love that about him. It's about time we have a president who really sticks up for the American people And I honestly believe that he believes in the American dream and giving opportunity and providing an environment for everybody to be successful in their own way, in their own time. I believe that. And that's good from a leader. That's what the president is supposed to be. That's what he's supposed to do. The exaggerations, the lies, I mean, you know, I don't want to accuse anybody of being a liar, because you pretty much have to know the truth in order to tell a lie, because you go against it. So I don't know if the man doesn't know and he just says stuff, or he does know, but he says something else anyway, which obviously would make him a liar by my definition. But that type of stuff is not good. And I've said before, if I were advising him, he never should have gotten himself involved with the stock market. Never. Never. He spoke so articulately during the campaign, attacking the Federal Reserve, saying it was a bubble, saying that quantitative easing did nothing but helped people like him, which I just said before. It helped people like him, multimillionaires and billionaires. It's a bubble. This economy is a bubble. It's fake. It's a mirage. These government figures can't be trusted. And then, of course, he becomes president and everything's fine, except he does still go after the Federal Reserve, but not on that same wavelength. Before, you would have been under the impression that he was going to rein them in, attack them, maybe try to abolish them, something, do something. Hold them to account, maybe audit them, something. But no, we don't have that. He wants to keep the money printing going. He wants the low interest rates. He wants further interest rates, lower interest rates. He wants quantitative easing to continue. He wants a weaker dollar, like he said during CPAC. Why do you want a weaker dollar? That does not help the average American. It just doesn't. It helps corporations trying to sell their stuff overseas. It doesn't help the average American, who now needs to spend more dollars on the same amount of goods. That's not good for this country. I get where he's coming from an export standpoint when he's having all of these negotiations with China and everybody else. But come on, you got to know better than that to say something like that. That just wasn't good. And of course, there was thunderous applause by the people at CPAC. I just think they were in the moment. I don't think they really realized what he was saying. I hope he does. I hope he retracts that a little bit and backs away from that. I'll see what he says as far as tweeting, because that's obviously one of his favorite mediums for getting his word out to the public. If he continues with that rant of a weaker dollar, it's going to be very interesting to see what happens, because he accuses China of being a currency manipulator. Not formally, but in rhetoric. So I don't know how you can accuse them of being a currency manipulator and then yourself wanting to manipulate our currency for the betterment of corporations trying to sell their products overseas, pretty much at the expense of lower and middle class Americans having to spend more money for the same amount of goods. So I can't connect those dots for you there. But that's what he said. That's what he said. And then getting back to the construction spending, again, this goes back to 2011. That was the lowest point, which is what we've been seeing with a whole bunch of data, not only from the United States, but from countries around the world. Recall yesterday's podcast, we brought up Taiwan and South Korea, some of their numbers, and those were 5.5 and several year lows that they're experiencing in their export markets and in their purchasing managers index for manufacturing. That's not good stuff. It's not good stuff. I mean, markets, there's ebbs and flows to everything. In the long run, these corrections are for the better. That's why they're called corrections. It's like being graded on an exam or on a paper that you're writing. You take it to your teacher. It's not the final paper, but you take it to your teacher and she looks through it and she says, okay, here's how you can fix this, that, and the other. She makes corrections to make it better. We should not fear these corrections, but we should be prepared for them. Of course, we don't want to go and give the report to the teacher and then she has a whole bunch of red ink all over it, because we don't want to have to spend all that time and effort fixing it. But guess what? It's going to be a better paper at the end of the day. It'll be a better economy at the end of the day if we really follow suit and change things structurally. If we continue to do what we did after 08, 09, prop up the banks, financial institutions, and the big corporations who are involved in its collapse, and if we continue to prop up our own government at the expense of unsustainable and unaffordable programs, then nothing has been solved. There has been no correction, and we will find ourselves back in the very place where we are today. Moving on to some other news, we have the People's National Congress in China meeting. They come out, they give their reports, what they expect for 2019, what they want. I mean, this is, these are your communist 5-year plans type deal. This is what's going to happen. This is what we project, all that stuff. Well, GDP, they are saying, is going to fall within the range of 6% to 6.5%. GDP, 6% to 6.5%. They used to give numbers. They used to come out and say 7.1, 7.2, whatever. They used to give more concrete numbers. Now it's a range, which is smarter because it gives them some wiggle room. If they got to maneuver this way or the other, they can always say, well, it was in the range that we gave. Hitting an exact target is obviously more difficult. This is obviously a decline. 2018 GDP for China was 6.6%, which was at a 28-year low, I believe. So now we're going even lower. Also, from this meeting, we have that they are committed to cutting taxes to the tunes of billions of dollars, which will be good for those businesses. Will it be good for the government, who was already overextended, in my opinion? What is this going to do to their budget deficits? Because you have a slowing economy, which already means you have slower tax revenues coming in, and now you're going to make tax cuts, which is going to keep more money in the pockets of the people, which is a good thing, but at the expense of government finances at a time when the government is overextended and I think is overheating and overstimulating an economy. Because why? They don't want to allow the correction to take place. Or they think that they can handle everything well because they're communists and they have 1.4 billion people, which is somehow, to a lot of people, the miracle, the special sauce that allows the Chinese to never experience any type of recession or correction. If you're a communist and you got 1.4 billion people, your economy is on fire for forever and a day. It can't go down. There can be no correction. The laws of economics do not pertain to you. You can just cut taxes. You can just print as much money as you want, and everything will be just fine. You can create as many bubbles in the real estate market as you want, in your stock markets. No problems. Now, of course, that's ludicrous, but that's what we're told. Because they're communists, they can move faster, they can direct their people what to do, and there's 1.4 billion people. Don't you want to be a part of that market just because there's 1.4 billion people? That's what we're told. I don't buy that story. I don't buy it. Here's an interesting fact for you, and consider this. This is amazing, by the way. This really is. I came across this. In the last 3 years alone, China has used more concrete than the United States did in the entire 20th century. Is that crazy or what? In the last 3 years, China used more concrete than the United States of America did during the entire 20th century. That is crazy. That is crazy. But when you look at the mega cities that they've built, you wouldn't be surprised. It goes to a lot of the ghost cities that exist. I don't know what the thesis was. Build it and they will come. It's not really how economics is supposed to work. So now you got all of these ghost cities around China. Nobody's living in them. That's why they're ghost cities. I mean, you can see the reports. You find this on the news every once in a while. You can definitely find it on YouTube. You have reporters in these huge cities. I'm talking the size of Manhattan, if not bigger. They're virtually completely empty. It's almost apocalyptic, like the end of the world. If you were the last man or woman standing on the earth, that's what it would be like. I mean, it's sort of just an eerie feeling just watching the reporter there on camera. But they wanted to build it. Why? Because they want GDP to look good. They want GDP to look good. But if nobody's there funding those buildings, then how are people making money on it? You see the scam, you see the fraud. Well, they're communists, and, we're going to support them, and there's 1.4 billion Chinese people, so everything's just A-okay. No, it isn't. No, it isn't. And if you read between the lines, going from 6.6 down to 6% or 0.5%. I mean, it's definitely a continuation on the decline. And Premier Lee, not President Xi, but Premier Lee, said, get ready for a tough economic battle. They know what they're doing. They see the writing on the wall. And the Chinese really have political pressure on them too, because you do have 1.4 billion people, and you have a lot of people who have moved up into the middle class, basically the size of the United States of America. And so there's income inequality and opportunity gaps. So they have to appease as many people as possible, because they don't want riots, they don't want civil war, they don't want their quote-unquote economic miracle to collapse under the fraud that's pretty much propped it up for many, many years. I just want correction. I just want fair value. We will move forward. That's what humankind has done. We're still here. Clearly, we know what we're doing to some extent. As crazy as it is, as many lunatics are walking around, we're still here. So that tells you something. That tells you something. And then the Chinese are going to continue lowering their reserve requirements so banks can lend out more money, and hopefully that money goes to smaller businesses in attempts to increase employment, increase GDP, the same thing. And then lastly, before I go, I know we've been talking about retail in the United States. Well, we have another 450 plus retail stores shuttering their doors across many different businesses. JCPenney, Gymboree, Payless Shoe Source, Victoria's Secret, Gap, Old Navy. I mean, almost 500 stores are closing. So if you have such a strong and vibrant economy, why are all these retail shops closing? What's going to happen next in the commercial real estate market? Because you're going to have a lot of empty buildings. So what's going to happen with prices there? I imagine they're going to fall. When will it show up in the numbers? That's the other question. The other thing that we have sort of maybe as a bellwether or something that's going on here in this superb economic paradise here in the United States is we have dollar stores on the rise. Now, I have nothing against dollar stores, but it goes to a broader picture, whether it's Dollar General, whether it's Dollar Tree, Family Dollar, the other ones, you got what, Big Lots and Ollie's, and, there's a handful of other discount stores like that, but they're popping up all over the country. Could this be because there is a quasi-permanent underclass in this country? I think that's true. Unfortunately, I think that's true. And that's why you have these things popping up all over the place. Sometimes they're right next door to each other, across the street from each other. I mean, they're just going up. They don't go up to not make money. They go up to make money, and they're making it. They are making it. So what is that saying? I mean, everybody wants to to stretch their dollar as far as possible. I get that and understand that. But there's so many of them. Is that telling us something about this country, about the true health of the consumer? And then lastly, before I go here, because this is another interesting thing, and I might have to follow up on this, but we have some grocery stores who are denying Visa cards. They're not going to take Visa. They don't want the plastic. Why? Because the fees are too high to use the credit cards. So now it's going to get interesting. Is there going to be a bidding war, with all of these cards to lower their fees? Because these grocery stores are competing tightly. They're competing now with these dollar stores. You have Amazon who bought Whole Foods. You have Amazon who now wants to get involved in creating other grocery stores. I mean, it is a very competitive market. And this is part of the process that we have here. When you have debt servicing, because we have these corporations that have just amassed a huge amount of debt that now needs serviced, and you want to start cutting your costs. Well, if you can shed 3 or 4% of what you're charged by using Visa, I mean, every little bit helps. I mean, because the next place you go is personnel, and you start with the layoffs, and then you're really going to start to see the downward cycle. Thanks so much for joining me today, ladies and gentlemen. It's been a pleasure having you. Please like, share, subscribe, get the word out, leave your comments. I would love to hear from you. This is the Capital News. I am Alex Koritis. Godspeed.